Hi, hello. I am Renugadevi. I am working as an assistant professor. I belong to Business Administration Department. I am working in Dr. SNS Rajalakshmi College of Arts and Science. In this video, I am going to discuss about long-term capital asset. So, under this concept, we are going to discuss the what are the capital assets. It's coming under the long-term basis. Okay. So, first of all, we are discuss the introduction about long-term asset. So actually this long-term asset is otherwise call it as a either fixed or capital asset. So these assets are those a business can expect to use or replace or sometimes it will be converted as the cash beyond the normal operating cycle. For example, at least a 12 month. Okay, so often they are used for yearly. This differences them we have to calculate from the current asset and also which company typically expand within the 12 months. Okay, because they are it's very harder to convert the cash than current asset. So they it is often they are referred to as the illiquid asset. So as a long term capital asset we are not able to easily convert as a cash. Suppose if you are easily converting the cash, that is call it as a liquid asset. Okay, how do you we have to explain about the long term capital asset. So first of all, the meaning. Okay, the capital asset means a asset held by an assessee more than 36 months or 3 years immediately preceding the transfer. So that kind of asset is called the long term capital asset. So sometime the long term capital asset also having some exceptional condition. Okay, so that exceptional condition only we are going to see one by one. Okay, so first exception, number one exception is in case the financial asset might be listed under the shares or debentures, either call it as a government security or UTI or mutual fund. So these all zero coupon funds held by an assessee, suppose is less than or equal 1 year, is considered as the short term capital asset. Okay, so STCA in this slide I mentioned STCA. So STCA is nothing but it is a short term capital asset. So if they are held by an assessee more than 1 year is considered as the long term capital asset. Okay, then exception number two, suppose if unlisted share held by an assessee less than or equal to 2 years is considered as the STCA. If they held by the assessee more than 2 years or the 36 months applied in the condition is considered as the long term capital asset. Next, the exception number three. Okay, so the land and building held by an assessee less than or equal, suppose we are taking the 2 years, is considered as the short term capital asset. If they held by the assessee more than 2 years, is considered as the long term capital asset. So clearly, please understand that land and building, suppose if an assessee they have to hold the period either less than the 2 years or equal to 2 years, it should be considered as the short term capital asset. Suppose that same assessee they have to hold the period more than 2 years, it is considered as a long term capital asset. Next, exception number four. So, under this condition, the depreciable asset it should be always treated as the short-term capital asset. Okay. So, the depreciable asset is nothing but what are all the assets. Suppose as an assessee invest in the particular depreciable asset. Say for example, building. Sometimes we are taking at the machinery, equipment, vehicles. These are all coming under the depreciable asset. Okay, so the depreciable asset is an main important that should be decreases in the value over a period of time due to wear and tear and usage, or sometimes it's a obsolescence. Okay, so that depreciable assets are typically used for generating the income or profit, should be have a useful life of more than a year.